So market is up a little bit today, but is this the level where we're gonna see a reversal, right, in the market before going back above 320 on Spider? Or are we seeing a short-term bounce before we making another leg lower? I'm going to answer that question in this video. We're going to do a little bit more comprehensive analysis today, looking through some of the indices that you see on your left. And so it's all coming up right now. Ladies and gentlemen, K-Kim here. Welcome to the market update video. Market update. Hope you guys had a good day trading, good week trading. Some craziness happened on Thursday. We saw indices crash like 5, 6, 7, 8, 9% throughout the day on Thursday. And today market is up a little bit. As you can see here on Spider is up about 1%. And then you can see semis about 1.5, Qs sub 1% there. Diamond, which is Dow Jones, it's about 2. Transport got up a little bit there, 3% there, and then Russell 2.4 there. So we're gonna stick. We're gonna do a little bit more extensive analysis today on the indices. Right, we'll look at Spider Q, Semi, Diamond, Russell, and the transportation average, and we'll end the video as we always do each week. We'll end the video with gold and Bitcoin. Bitcoin is trading at a very interesting level, so I definitely want to talk about that. So let's start with the Spider. Let's actually go to our 65-minute chart. We've been analyzing it throughout this entire week on my daily update video. So let's go to 65-minute chart and trying to figure out kind of what happened today, looking at things more of a short-term price action here. So just to recap, just to follow up from what we've been talking about last night. So, the first thing we talked about last night was that we will see a bounce, right? We will see a bounce. We did see the bounce. And one thing that I said a lot throughout the video yesterday was benefit of the doubt goes to the what? Goes to the sellers in the short and to midterm, right? So you can see buyers gap that up, and that's a pretty decent gap, but isn't that interesting? It gapped just right underneath that moving average there, right? We talked about that moving average yesterday. We may go up there, hit that resistance, potentially pull back. This is why I kept saying last night, benefit of the doubt goes to the sellers in the short term and in the midterm. Even though buyers done a great job here. I mean, really gapped that up. I think a lot of people didn't see that one coming. Just like a lot of people didn't see this, this mini crash coming either. So market is a lot of times full of surprises in the short term. That's why you want to kind of understand the longer term picture. Then you know what I mean? Then at least you can kind of gauge the market. You can navigate through without being shocked or in panic or anything like that, right? So anyway, benefit out goes to the sellers, which we talked about yesterday, short to midterm. So you can see that my midterm moving average did act as resistance there. We got up, we gapped up, and then quickly we fell, went all the way back down, got back up in the same hour. And we threw that hammer candle there, so that looked like potentially reversal candle, right? Because we talked about when the gap gets filled, right? What does it do? When the gap gets filled, it acts as support, right? We've been tracking gaps throughout this entire year. So we did see initial bounce after the gap got filled, and we did see that hammer bullish reversal candle there in the hourly chart. But why didn't we not see a follow through? It seems that every time when we see something like a hammer candle, it seems that market is very good at responding to it, going back or following through to the upside. Why is it this time around we did not see a follow through? Because the benefit of the doubt goes to the sellers. You see, we are in a different environment. We're no longer in a bullish environment in the short term, right? We have to be fair with bears because we've been fair with bulls, right? Last several weeks, we continue to talk about how benefit of the doubt goes to buyers. Benefit of the doubt goes to buyers. So it seems like every small tiny pullback or something like that, it seems that we threw some kind of hammer. We throw any kind of bullish reversal candle. It seemed to work very well. And it seems that bears were not really catching a good break in the last 3 weeks, right? Is that true? Right. Because benefit of the doubt was going to the buyers in the short term, mid-term, long term, which we talked about last 3 weeks. After yesterday's price action, well, benefit of the doubt does not goes to buyers anymore. So we're in a different environment. That means bears got it in control in the short term. So even though it threw that, pretty long lower wick, classic textbook hammer candle, we did not see a follow through to the upside because, again, benefit of the doubt goes to the sellers. That's not going to the buyers anymore. So what happened? That's the third hour. That's the fourth hour. We briefly made a lower low, the new low here. This is what I was saying yesterday, right? I don't want you to be too precise with that level, right? Some people are just very, very sensitive with levels, right? So maybe you're gonna put your stop just underneath it, and market is gonna come down, take your stop, and it's gonna go against you. So that's why you always wanna give some wiggle room. Don't ever choke your positions to death. How many times you choked your positions to death and the market came, took your stop, and went opposite direction? How many times? Right? This is why you want to kind of give levels, understand the levels. Anyway, so we continue follow through because I think right after that hammer, that reversal didn't see a follow through after that. Bulls lost that mojo, that momentum, right? And then bears brought it down. And then we got into where? Where do we get into? Now we're getting into that location where we're dealing with the longer term moving average, which is a near 297, 298 area. Well, that's the area where you have to give benefit of the doubt to the buyers, which we talked about, right? We talked about short term, benefit of the doubt goes to sellers. Midterm, blue dotted moving average, benefit of the doubt goes to the sellers. In the longer term, however, benefit of the doubt goes to buyers. Well, bears tried. Bears did try to bring it down, make new low, but we were in the vicinity where my longer term moving average is rising. And they remember last time when we saw about 6% correction, you remember what happened since that level? We saw about a 17% bullish move in just 3 weeks, right? So we got pretty near to that level and bears trying to bring it down, trying to test that area, see what the bull's gonna do. Sure enough, we did see a little bit of buying activities in that vicinity there. So you can kind of see the battle that's going on here. The short term got rejected and then Brent came down, started entering into level where that longer term sentiment is residing in that vicinity where we have to give benefit of the doubt to the buyers in the longer term. We did see 2 hours of buying activities towards the end of the day. And this market is always going to make you guess the whole time, every single day. It doesn't matter where we're at, man. Something you have to understand is this market, it doesn't matter if this market is at 220 or 300 or 340 or 400. Every single day, you got something to worry about, right? You have to understand that, right? Don't ever think, okay, once we're above 320, everything's going to be swift. No, it won't. There will be something else you need to worry about. Every single day, something is going on. You have to understand it doesn't matter where we're at in the market. There's always something is happening that is potentially negative in the market. And our job is navigate through that. So anyway, So after today's move, do we still have to give benefit of the doubt to the sellers? Or is it like bullish now? Is the benefit of the doubt goes to buyers now? Well, these moving averages make it pretty simple though. We are still below my midterm moving average, and we're still below my short-term moving average. So until the price start cultivating higher lows, higher highs above these moving averages like this, you see right there, higher lows, higher highs. Until then, we still have to give benefit of the doubt to the sellers in the short term and in the midterm. But just I've stated just earlier in this video, but the longer term benefit of the doubt goes to buyers. So the question is then, are we seeing repeat of May 14th? Right? Or that week where we saw that, about 6% correction, and that's about 7% correction there. Are we seeing the repeat of that before this thing going higher? We don't know yet. We don't know yet. Is this the top? Are we gonna go and start, is this gonna go up a little bit, cultivate lower high, and then come down and make a lower low? We don't know that yet. We don't know that yet. Just like back in May 14th, right? I talked about it yesterday. There's a lot of commotions around, May 3rd, May 14th here. A lot of people were bearish back then. And I still remember talking about, I want to give benefit of the doubt to the buyers in the longer term because we're in a gap area. And then my long-term rising moving average still in that vicinity. It's still rising. So I want to give benefit of the doubt to the buyers in the longer term, but in the short term, we're bearish. And then when that thing got up and gapped above it, and then my short-term moving averages start rising back up and we start cultivating higher highs and higher lows, there you go. Now the benefit of the doubt goes to buyers, and then ever since then, market soared. So until I see that happening, price action trading above both of my short-term moving averages and cultivating higher lows and higher highs, I still have to give benefit of the doubt to the sellers in the short term. But the overall picture, however, so let's go to daily chart now. The overall stance, the overall posture, are we bullish or are we bearish? When you just look at this chart, what does it look like? Right? I'm not talking about your emotions, man. I'm not talking about what you feel, right? I'm not talking about your speculations or conjecture. Conjecturing is kind of like, well, because of this, because of that, I think we're gonna go March lows. That's like conjecturing, because whatever you're saying now, why you think you're gonna go March lows, whatever you're saying now was the same issue that we're dealing with in March lows, and market did 45%. So you still bringing that up now, same issue that you think is gonna go to March lows. That's not. So just let's kind of remove all of that fear, emotions, and just your everything. And let's just look at this chart right here, right? Let's just look at this. Are we bullish? Just as of today, I'm not saying what's going to happen on Monday. I'm not saying what's going to happen Tuesday. I'm not saying what's going to happen next week, next month. Just as of today, with the data that is at hand, right? Are we bullish or bearish? Right? Are we bullish or bearish? Don't say but or because or nothing. Just yes or no. Bullish or bearish? Bullish, right? Things can change, man. I'm not siding with the buyers. I'm not siding with sellers. I just want you to see, as of today, things could change. This thing could come down, do something like that. There you go. You got the left shoulder. You got head. Maybe that's what's happening. That's what you call conjecturing, right? Maybe because people thought that, well, that's the dead cat bounce before doing that. Oh, that's gonna be doing something like that. So conjecturing never works. You always have to do your analysis based on what you see in front of you, right? Things could change on Monday or Tuesday or Wednesday, and then we'll re-examine the situation. We can go from there, and we can adjust our portfolio going forward. But for now, as of today, are we bullish or bearish? looking at daily chart now. So we're looking a little bit longer term now. So we're no longer looking at 65-minute chart. We're looking at daily chart. Longer term here. Bullish. Why? Well, simply we do have higher high. That's definitely a higher high there. That's a low. That's a higher low. That's a higher low. That's high. And another thing that I think I didn't mention last time, or I didn't have a chance to, is that we did have that island. I don't want to dispute the fact that we do have island reversal. Island reversal is probably the most strongest reversal pattern, short-term reversal pattern, that could lead to further decline or further gains. And we did see that island bottom reversal. And that from there, we did see a huge move. We do have an island top here, island top there. But because trend is up, we have to see how this market is going to behave going forward. Because even though we saw island bottom here, at that time, my short-term moving average was still falling. So in the short term of things, still was bearish sentiment until price got above it and then start cultivating higher lows and higher highs. That's when things turn bullish. And then now finally we can say, wow, that island reversal truly was the continuation island reversal. Right now, we have to see, okay, that island reversal, is this going to be truly atop this thing before this thing does this? Or is the buyers going to go up and fill it and then now there's no more island? The buyers nullified it, neutralized it, pull back, and then do that. That's non-event. If we do see something like that, I'm not saying that's what's going to happen. I'm not saying this is going to happen. I'm not saying this is going to happen. All I'm saying is what we see as of today, right? We have cultivation. Can we all agree that that's a lower high? Low, lower high, boom, right? That's the lower high pattern. This is the first time we have cultivated higher high. Do you see that? That's a high. That's a higher high. We're no longer in a downtrend. See, if the market would have pulled back here from this point, we could have still said in the primary, intermediate to primary term, okay, there you go. We got the high, we got the lower high, and then another lower high. And then that's a lower low. And then if this thing comes out, make a new low, that's a lower low, lower high. Then we are truly in a bear market, the real bear market that could be prolonged for 1.5 and 2 years, right? We don't have that. We have higher high. Right? While we already been cultivating higher lows and higher highs here. So that makes a big difference. That little piece of information, that little poke its head up kind of information, bears like to call that a trap. It's not a trap. It's a cultivation, right? Market went up, cultivated higher high, and then pulling back. And what that means is, it means we have higher probability of market cultivating higher high and it's pulling back to establish higher low before market goes up, because the market never goes straight up. It makes higher lows and higher highs. That's what you call an uptrend, right? Very basic technical analysis, just understanding higher lows and higher highs. So looking at this daily chart, it's a little bit different in the daily chart. I have to still give benefit of the doubt to the buyers in the short term, because my short-term moving average now is that green, that moving average right here. That's my short-term moving average on the daily chart. So I want you to understand my 65-minute chart analysis, my daily chart analysis, my weekly chart analysis, my monthly chart analysis. I don't do weekly and monthly chart analysis for you guys here. I do that for my members, but they're all going to be different. So on my daily chart analysis, short term, benefit of the doubt goes to buyers. Mid-term, benefit of the doubt goes to buyers. Longer term, those are my longer term moving averages. Benefit of the doubt still goes to buyers. So in the daily chart, in all terms, benefit of the doubt goes to buyers. In all terms. On the daily, not 65-minute, on the daily. This chart that you're looking at, not on here. Because we just talked about how, it's different sentiment. Daily 60 minutes, different sentiment, right? because we got this moving average cluster right here. We're just trading right in that vicinity. So at this point, we don't want to say this is going to go all the way down to the March lows. At the same time, we can't just say, you know what? Yeah, man, next week, bro, it's going to gap up. We're going to 3, 4. We can't just say that. Once I see sentiment shifting, then I can call out and say, you know what? There's a great chance. Let's say if this thing goes up and fill this gap, pull back a little bit and cultivates higher low, and then it start moving higher. I'll say at that point, okay, yeah, I think there's a good chance we're going to go back up here and fill 333 gap. But for now, let's not dispute the fact that we do have island reversal and that gap is still remaining open. And buyers need to fill that as quickly as possible. I'm being fair here with the bears because I was fair with the buyers. If you've been following my videos this entire month, last several months, I said the longer this gap remains open, the better it is for the buyers. And we've been tracking this gap every single, single day, right? And we've been talking about this. All this move, we've been talking about this. Look at this gap, man. I mean, it's been open now for how long now? 2-3 months. The longer they're open, the better it is for the buyers. And I was fair in that regard with buyers. So now I'm gonna be fair with bears, right? I want to be fair with the bear right now because this gap, that's an island gap. The longer they stay open, the better it is for the bears. So what bears need to do, protect this gap. Do not let the buyers go up and fill it. If they can protect it, you're going to get your 290. You will get your 290 if you protect this gap. But you don't protect that gap, buyers go up and fill that gap, you're not going to get your 290, right? Let's go to Qs here. Qs briefly made all-time high, new all-time highs, and a pulling back here. But look at this moving average. Maybe this time is different, but I have to give benefit of the doubt to the buyers in the short term, man. As of now, as of today, we may break and we may come down, and I believe there's a gap there, right, at 227. Never mind. There's no gap. I mean, tiny maybe, but there's no gap. Let's remove that from last time, I think. So there's no gap. So then I think, yeah, there you go. So I got some of these levels right here. There. So if we lose that 10 EMA, and then this gap, that little gap still open there. If we lose that 10 EMA, probably the next destination is that my midterm moving average, which is at about 221.97. So 221.97, I think 221.97, 215-ish level is probably a good level for, at least for my time frame, for me to kind of accumulate some NASDAQ stocks there around 221, 215. I might even add on my Apple shares. I've been long on Apple since March lows. I'm holding full on Apple. And so if we see NASDAQ coming down 221, 215, I'll probably accumulate some NASDAQ stocks, you know what I'm saying? So at this point, let's give benefit of the doubt to the buyers as of today. Things could change next week, but as of today, I want to give benefit of the doubt to the buyers in the short term, because you say, well, okay, this time is going to be different, okay? Oh yeah? You probably said it in May 27. You probably said it in May 14. You probably said it in May 1st. You probably said it in April 20th. And you probably said it in April 3rd, right? So you can't just... Because, I mean, if people calling it this time is different now, how many times have been going? That's why you always want to do your analysis based on what you see now, not what you think is going to happen tomorrow, next week. If we start to see this thing pulling back, then there's a great chance it will come down to 221, 297, 221, and 215. And then that's the level I'll be like, okay, that's the level that I might be interested in accumulating more of a long, to accumulate more shares on the NASDAQ stocks. Let's go to semiconductor. All right, so we talked about this on last weekend, that we do have an island reversal here, because that was definitely a gap down. That's that gap up. But it kind of loses its potency because that happened after a prolonged uptrend. So that actually happened after semiconductor made 50% move, and then we threw that island reversal. It's probably more of an exhaustion gap at that point. So we talked about that on the last weekend's video that it's gonna lose its potency. Like if it happens like after steep decline and then you see an island, right? We kind of saw that here. There was a gap down, there's a gap up. That definitely has its potency. But after 50% run and then you get the island, yeah, I talked about how he was gonna lose his potency. So we got up for like 4 or 5 days though, and then finally pulled back and filled that gap. And I'm no surprised by that. I'm actually glad that that gap got filled. So let's do a little bit of maintenance. So we have gap here, right? There's a gap right there. And is there a pivot? Right there. You got similar pivot. You know what? Let's put another one. This is kind of what I mean. You always want to, if you're drawing lines on your charts, this is how I'll do it. Don't ever do a thin line and you're gonna be like, oh my god, right below it, I'm gonna short. Like that doesn't work. So like do what I did, like put a box. That way you know this is the vicinity. This is the vicinity of a rising pivot. Because definitely that was that support, and then it was resistance, and then resistance. We got and it's a congestion kind of a, you know what I mean? That is that zone, and you got that some of these moving averages hanging around here. Currently though, what's going on in semi? Are we still above my short-term moving average? Yes. We're just right there. We actually did see a dip buying activities here. So on the semis also, I have to give benefit of the doubt to the buyers in the short-term, mid-term, long-term. Looking at things daily chart, right? Because it's, you know what I mean? We're still cultivating higher lows and higher highs. It pull back. We've seen these pullbacks before here, right? Here. So how many times do you think these gloom and doom people, every pullback, oh my god, 1929, oh my god, 2000, oh my god, 2008, oh my god, 1929, 2000, 2008 combined, right? While this market makes new all-time highs there. Let's go to Dow Jones. Dow Jones has a very clean, wow, look, so this is fantastic because we actually saw a gap down, right? So this is where it closed back in March 4th. That's where it closed. We gapped down next day. So there was a gap down here. And then we gapped right above it. So then gap down became a gap up, right? And then we gapped down again. So now gap down became a gap up. That was an island bottom reversal. And then now it became island top. Back to back. We haven't seen price trade around like 265 for like several months. This is like there's gap window there. Put a box there. Let's put a box there. And so, what can we say about the diamond? Let's put that there. I want to give some of the moving averages there, or some of the horizontal supports there. So we're kind of sandwiched between the you know what? Like we gotta turn that into purple because that's now bearish island top reversal, right? So we got the island top reversal, right? As long as that gap stays open, you know what I mean? It favors the bears, favors the sellers. So now you can see that we got some up gaps here. So we're holding above the up gap, holding beneath the down gap. So it's gonna be battle of the gaps. Who's gonna go down or go up and fill these gaps first, right? Bulls, you wanna win this battle, go up and fill this gap, neutralize it, pull back, and then get up. Bears, keep this gap open, let this fall, and then fill these gaps. And then when the gap gets filled, you're gonna see buyers coming in, and then on a move, well, that will be the next time to discuss how the market is gonna behave, but we're still in this vicinity there. kind of sandwiched in between on the Dow. Dow looks more vulnerable though versus Spider, the NASDAQ, and Semi. Look at my longer term moving averages. You see those two moving averages? We're hanging around here. We gotten below it now. All these guys, Spider and Q Semi, they trading well above the long-term moving averages on the daily chart that you're seeing now, not on the Dow. Let's go to transportation. This is Dow Jones Transportation Average. Let's put that there. I think that's important level, right? Because that's a prior resistance support there. There's a gap. There's a down gap. There's another down gap up here. So we got two down gaps. There's small gap there, there's a tiny gap there, but there's pretty sizable gap there. And let's annotate the all-time high level there. I guess this is first time looking at transport with you guys. That's why I don't have any annotation here. So looking at this, are we bullish or bearish? Structurally, posture, the posture of this price action is kind of bullish, but transport is still very much vulnerable. Why? We got these lower highs here. We got the lower lows here. So longer term, looking at transport, I have to give benefit of the doubt to the sellers in the longer term. But I don't know if you remember, it was a couple days ago, a couple weeks ago, I don't remember. You remember how when you're looking at the indices, when I'm looking at Spider, Q, Semi, Dows, Transport, and Russell, you kind of have to put all of them in the same boat, So I can't be extremely bearish on transport just because this sector is, long-term bearish. But you have to understand though, it's much more vulnerable here on transport. That's why you're gonna see much steeper pullback when we do see a pullback. Because you see how NASDAQ barely pulled back. Same with semis. But you see how small caps and transport and the banks, they just tanked. I think banks were down 9% yesterday, and transport and small caps were down 8% yesterday. So they were hit harder. Why do you think that? Because they're more vulnerable in the longer term, do you see? So this is how you can kind of gauge. And NASDAQ is, holding up really well because it's most bullish. Because you can see that in a longer term, it's bearish. That's why. That's why it acts more emotionally, more fearfully. You know what I mean? Every time we see a decline, it tanks. But overall posture though here, you can see that, you got that highs, and we got the higher highs there. We got the lows. At least we're still doing that, and that's a good sign. That's a good sign. At least we're doing that. So that's a prior resistance. We're right at that support level. So obviously there are these down gaps here. These up gaps has not been filled. So right now, again, it's going to be the battle of the gaps. Bulls want to fill these gaps, but when these gaps get filled, it's going to act as resistance. We may even come back down and make, maybe double bottom or something. I'm not sure. But these gaps are going to provide resistance. This is why gaps are great, because when the bears deploy these gaps, even the bulls will come right back and fill it. That's going to act as resistance. It's going to pull back. Unless, though, there's some vulnerability with gaps. If buyers gap it up, though, that's going to become an island bottom reversal, and bear bulls will come and fill this gap, pull back, and go higher. That's why gaps, there's good things and bad things about it, right? It's a good thing when you open up a gap. When it gets filled, it's going to act as resistance. But if buyers gap above it, now you're in trouble, right? Let's go to Russell 2000. So Russell 2000, fill that gap, remove that, remove this for now. We got that support or that gap there. So I'm gonna put another one right here because there's a gap area. All right, so it's a similar stance that we have, right? It's a similar stance that we got the highs continuing to cultivate and lows continuing to. So I still have to give benefit of the doubt to the buyers in the short and to midterm on the Russell 2000. I mean, I do see that we have this gap. That's a rather large gap. And look at the hammer candle there. We're near that gap. That's going to make bears a little bit like, okay, it's going to make them guess. So right now we're at the gap area. There's no mistake why we're just trading just underneath that, because that's the resistance. That's why gap is great, because the whole gap area becomes either gap fill becomes resistance, gap area becomes resistance, you see. But one vulnerability it has is what? If buyers gap it up, and there has to be some significant gap. I mean, how much percentage would that be? Yeah, that's not gonna happen. It has to be a 5% gap up to gap. So best case scenario, maybe then Monday it trades higher a little bit, and then we kind of fill like half of it, and then possibly a gap up, or we gap up halfway and then fill it, and then come back down, fill that gap again, and then get it. So there's a lot of things could happen, but overall I think this is going to be an important piece of information going into next week. But this is the resistance right now. So if we don't continue higher to the upside quickly as possible for the buyers, we're going to fall. And we're going to come back to 135, 132 there. So let's go to gold. Let's go to gold here real quick before I end the video. It seems that we are still in a consolidation manner on gold. You know? We talked about how there seems to be still some kind of a bullish or bearish divergence of some sort. So we're still not advancing. We're just kind of moving sideways. So maybe gold is correcting through price instead of correcting through time, I mean, instead of correcting through price. So sideways move is always great because, you know, it gives buyers to rest and digest after a move like that, potentially before going higher. So I think it's constructive because you can see some of these consolidation you see here in the past, right? So these consolidations are usually a good sign because that's how, again, this is how buyers like to operate. Buyers love to just consolidate, and what they do is with the consolidation, they absorb volatility, because what happens is after a big run up, you know there's going to be a short sellers coming in, you know some buyers are going to start taking profits. So instead of correcting through price, it will correct through time and then consolidate, absorb those volatility, and then before going higher, right? So that's kind of what it's doing here, I think, right now. And let's see if it can continue higher to the upside in the next couple of weeks. One last one here. I'll talk about Bitcoin. Let you guys go with this, but I thought it was very interesting because I think this was important pivot right here, and it looked like here. Let's get rid of that. Actually, that's making it a little bit busy. So we've been talking about. I mean, we've been tracking this falling channel resistance. I don't know, for months now, and we talked about in the last week's video that buyers need to get up. Right, need to get up and get back and tag 113.47 as quickly as possible, because here in Bitcoin it's attempted to break out several times and it failed. And then it looked like on Wednesday, this is what it looked like on Wednesday. It looked like finally it was breaking out right there, and then it gapped down while all the the market was down quite a bit on Thursday. I guess it spooked Bitcoin investors too. And then it pulled back. We're right back at it. That's a little bit concerning. Because when you see an attempt, like that, and then when it goes back into the channel, a lot of times that's really a head fake. Why is that more of a head fake this time, Kay? Last time you said it's a cultivation. How come this time is a head fake? Well, because we're on a downtrend. Because we're on lower highs, right? If this was an uptrend, if this head fake happened like here, right? Like it poked its head up and then fall back, and I would say that's a cultivation. That's constructive. Here, though, we're in a downtrend. There's nothing constructive about that because we're still in a lower high. Does that make sense? We're still in a lower high. So the trend is down. The wind is blowing to the downside, right? So wind is blowing to the downside, and then it's trying to poke his head up, and then it can't get back in here. So I think unless we see some shenanigan move to the upside, some crazy move to the upside, it's gonna start dripping lower, come back to 8 and fill this gap. That's what I think. So, well, there you have it for this weekend's market update video. We did some more extensive analysis over the indices. And, you know, basically at this point, you know, it's difficult to just say, you know what, we're going to go to March lows. I can't just say that, you know what I mean? And I can't even say, you know what, we're just going to go 340 next week. I can't say that either, but we have to keep in mind, these are the things we have to talk about. These are things we have to keep in mind. We do have island reversal. We are still in an uptrend, but we did see some selling pressure. Looking at 65-minute chart, yes, there, you know, the short-term benefit of the Dow goes to sellers. Mid-term benefit of the Dow goes to sellers. However, we got longer-term benefit of the Dow goes to buyers. So again, it's never black and white, but you have to keep in mind that there are these things we need to talk about. There's these things you need to, you know, be concerned about. But your posture in the overall market should be bullish. So overall posture, overall stance, overall your stance in this market should be bullish. Doesn't mean you go all in here, right? You still have to manage risk. You still have to know, allocate your you know, understand how to allocate your positions, your you know, position sizing, and all of that has to be implemented. But what I'm saying is, when you look at this market without being too negative, too like, yeah, man, this is a huge dead cat bounce before this thing go to, you know, 150. Like, that kind of thinking is very detrimental. And I think a lot of people who think like that, they're pretty much looking for a big lotto win, right? And so I you know, it would be better if you look at this market objectively and what we see right now, what's happening right now versus what you think is going to happen in your imagination. And a lot of times people think that way because they're biased. They have a just big short, they got some lotto put options or something, and they want to get like 1,000, 3,000% gains, man. Like, they, you know, they want to do something like that. And so it makes them feel better if they keep, you know, following and listening to these videos and tweets and news about why, you know, this market could get into 1929 Great Depression, because they are positioned that way, in that way. So that's why they continue to be looking at the market in a bearish manner, even though what you see here in the price action that I've laid it out for you, every single thing I've laid it out for you in this video. That will be enough information that you know, that will get you through next week and have your stance in the market in a correct way, right? So anyway, so you guys, thank you for staying through the whole video. If this is a 40-minute video, and usually my market update videos go about that long, but thank you for staying throughout the whole video, listening through all the way. So you guys enjoy your long weekend, and good luck trading next week.